Bear with me. Let's check on the browser. To go straight to trade management. So that was our premise. That was our premise. That was our bias. We had to do that as of this morning, and even quite until now. We don't have analytics, so we envision to have completed. So remember that we are in an SMA, and how to a higher degree jump, bullish way, sterling against the United States dollar, and structures take a look at the clump gold. Gold is important, it's moving down. And then we'll get back, and probably also oil, then we'll get back to the sterling against the United States dollar. See, I know about that it does for back proportions, so that's okay for an alien structure. So if that was a 5, out of C. Alright, now this is what. So yesterday we expected to finish C. We spoke rather confirmation that we're going to finish C. And we bounced all the way, I think, up to 1 those straight management. Okay. So that is C right here, and we are now in doubt that so that was our premise, or that was our bias as of this morning, and even quite until now 1931. So we envision correct all the way down to the bottom of the reset point. Remember that we are in an asymmetric triangle. That could there is still a possibility that this is the bottom of one, it's not that a higher degree here, bullish here, waves on the higher, bullish up, and in that case it's very clumsy, I know, but it does hold correct proportions. Okay, that is still a way for an alien schematic change. So that was a 5. We are going now. I can see itself below that line. We finished A, market is finished B. And we should be bouncing around now after that. Of course, we were bullish to have bounced out of C, and that was our. So yesterday we expected to finish C. I tried to have that medium long at 1,000, and we bounced all the way, I think, up to 131. We will be seeing yesterday our value was so that C right here, and so we are now in doubt that this will have any loop on top of the case. Alright, we're still bullish today. This is on our chart, and now of course you will be still carrying 1,931 has been corrected all the way down to the bottom of our presumption is that if this is correct, this is the 1, 2, and 3, and we should be testing all the way down to 1,910. There is still possibility that this is the bottom of 1 and not that one. Currently testing 1,903, right? Then we on a second leg higher, and in that case, 5 at 1,900 bullish, right? The correction is still valid, and we have a degree. If we're going to, this would be an intraday trade. So we're going to take it an intra-week trade, that is still 1,900, and so it's the matter of changing the label. Okay, so we will hold our stock as the right out below the loss of 1, even if it's we should be bouncing around now after that. If, of course, our analysis fails at the point of 1, and that will we're going to take a look at that chart here. Once we break below 1,000, that we would long at once. Our stop yesterday was there, 1,908 and 1,919. Because this could be spike, we will be seeing yesterday our value was 1,933 down to here. Right. So if we had taken drop 1,809 taken drop this about these, right? We're still bullish today. If not, of course, we're still carrying 1,903, and it is actually more or less to our presumption is that if this is correct, below our 1, 2, and that's our E, and we should be testing all the way down to 1,910. I did not expect to be testing 1,000 to currently testing 1,000, and that's the second bottom to this right. So then I'll stop down to 1,890. On the second leg higher, we'll be doing 5 at 1,000 below 1,005. Okay, once we break that level on a rebound, this would be an intraday trade. You are not taking this intra-week trade. If not, you want our stock at 1,690. And so we will hold our stock is right below the bottom of 1. Even if we get spiked, Okay, this is the out of that level. We should be seeing 100. Our analysis fails at the point percent extension at 1,955. That chart and for intraday to low level 1,900. Our stop yesterday was there, 1,899. So, if we're going this big investment, I would rather we think that stimulus package does come out, hopefully. We should be seeing 1,916, 1,809. So this will be one of the top, this will be more, and it will actually do more or less to, and again, it's here at 1,945, so our entry we trade, that's our entry 1 year, this so that's this bottom. Remember that we are actually expecting price to keep attacking this. So we'll take our stop down and higher, 890, okay, in order to support within this break below 1,808. What's happening so far is this, has proven, once we break that wrong on a rebound, we show our structure that we cannot monitor decently, if not, just keep our stop at 1,990, and we would adhere to these targets here, and very important targets here. Okay, so we have not yet, okay, this is for intraday level, we should be seeing 100 and the consolidation cycles into consolidation extension at 1,900. Because of the fundamentals, we still and for intraday level, that trade these cycles several times, and so we will see 1,945. Okay, so if we're going at 1,900 investments, great, let's see, the stimulus package does come out, so our targets remain flat, seeing 1,965. Discipline. Alright, observe the market is now 1,904 and adhere to our plan. And again, it's here at 1,945. When it is long trade, one can believe that this structure will hold. Remember that we are actually expecting price to keep attacking this, and if we don't bounce out of it, line and higher, okay, in order to support within this. So what happens then? Alright, this. What's happening so far is bearish has proven a strong and consolidation structure that we cannot penetrate decently on just this 1,900. Remember on that chart we were expecting rejection at 1,938.8 and very important again that is 5. Okay, so we have not yet penetrated the consolidation cycles into the consolidation cycles 1. So because of the fundamentals we still expect, and then we have double shoulders and we're going to break the neckline and we're going to go bearish on negative momentum here. Well, it could be that the current run up to 1,935 here. So our targets remain valid. Right? We just have one. Actually, right, observe the market, it is now 1,904, and adhere to our plan as structure. Okay, so what we are doing is we're long and believe that this structure will hold. So this is how the structure will point for us. We expect to have a round double shoulders and one head. And now 1,900, take our stop down 1,990 and 31, that would I believe 1,000. Okay, so what happens then? So we have a lower head valid and we're considering now another shoulder and we still have a bearish and we're bearish, we're going down. Okay, and this is what this is. Okay, at 1,931 because we have not broken. Remember on that chart we were expecting this possible rejection at 1,930 shoulder. And this is the bearish 5 and that's breaking the neckline at 1,880. Okay, and that will buy will check the other one, remember one scenario, so that's at 1,880, we go bearish, and if there is we have double shoulders, and we're going to break the neckline, and we're going to go bearish on negative momentum, negative spike. Well, it could be that the current run up to 1,900 into the market at 1,880, could be will break below that neckline, actually form a double head. That's when we'll see good negative momentum, and then we will see that negative structure here or here. We will engage the market short above this neckline or at this neckline or slightly above. This is the yellow arrow that we're saying. This is our expected to have a short double shoulders and one head. Now at 1,920 consensus at this point. 131 at 1,806. So then we would go short. So we have a lower head here, and we'll be doing now another shoulder, and we're still going to keep our stop, and we're bearish, we're going down. That's that point here. Okay, and this is our this move target again 100 at 1,931, the fluctuation local because we have not broken and 1,701. It is possible that we're doing a double head, look at momentum, we're doing the double shoulder, and this is a bearish formation, and we're breaking the neckline at 1,880. Okay, and we'll go lower. We will remember this scenario at 1,880. We'll go bearish if there is negative momentum on the hourly chart, more or less prolonged, a strong negative spike on the hourly chart on the 15-minute chart. Right, not just go into the market at 1,180. We'll break below that white line, probably all the way down to here. That's when we'll see good negative momentum, and then if we see that negative momentum here or here, we will engage the market short above this neckline or at this neckline or slightly above at these yellow arrows. Okay, this is our worst case scenario, that we'll only see momentum, okay, and consensus at this point running into the DC at 1,861. Then we will go short at 1,860, 1,870 to be therefore right. We keep our stops at 1,915. That's that point here. And we are going for targets to 1,800. We cannot be sure on that anyway, the fluctuation local demand. And 1,760 breakout for the month. So let's take a look at momentum. Momentum is beginning to show negativity on the one correct chart. Stay possible. What counts is that this closes below the top of one, not the previous spike. The top of one here. So break below the top of one, more or less, at least prolonged, strongly negative on the 15 minutes. Clear. Alright, we can now structure now that this way, probably that would be our growth wave, that will be the one what we extend, what the second one will be. This structure here now wave 1 to this. Okay, and we're running into the DC. It's like this is below the top of 1 mil, and we want that we get out. We're going to fly like we seem to be definitely, we're going to break the probably we would expect the top of 1 here. This is elevated, and there's no point. We cannot wait any lower sure until we are first. And we would sell them for 1,110 with our nerves. We could be doing some kind of a correction, still possible. What counts is that this closes below the top of 1,905. Remember, this is the way to sell. If that does break below the top of 1, this is this has completed and died, like it will clear, finished, bearish structure. Okay, that would be our growth wave. That will be. This is what we would extend, what we expect to extend lower. And therefore we could out-confirm that our way, we out-confirm, we will do this, a spike from 1. So this goes down because we already have negative momentum, like that we explained on the hourly. And we have strong, even what will be below the top of 1 million, and we want to get out. So we will both expect we are now good to short. We probably would expect that this has been invalidated, and there's no point, there could be no point in waiting it lower. Okay, and we would sell then 1,910 or 1,911. This is going to 1,910, 1,910. Remember, this is the way to sell 1, 2, 3, 4, 5. This is now, this has completed and died like a wave 1 is finished. Okay, terminates here. And that is 1, 3, so negative momentum on the full hour to sell. Okay, this probably gets filled at 1,900. So I think we will reverse bias. Okay, it could be then considered safe, early short. I would just want to witness the growth on the hour that way below the spike from 1. Okay, because we already have negative momentum, like has been explained on the hourly. and we have strong, the ones that what we will consider to be strong negative momentum. So we will go short. Forget about long, go to short, abort our long, go back to abort the longs on the stop of course is about traction higher. You could also consider to abort the long now below your long at 1905. Okay. Your profit, take profit at 1910 and you go out with a $5 loss. Or something like on a mini lot, $50 or on a micro lot, it's even beginning to show negative momentum. So you may want to go there. You could try to go out at 1,115 of course. So I think we will reverse bias. Okay, if you go out 1,110 early, you will get going early. I would just want to wait, just really. You see the bottom is too broken. That's all. Just in case there's something I missed that will not repeat. Okay, so I would want to see the bottom of that one broken. That one will be. Okay, once that thing gets broken, okay, we're in. We need to short. Forget about long. We will abort our long. We will then abort the longs on a retraction higher. You could also consider to abort the longs now. To recap on your long at 1915. Okay, we're seeing here the best we're going to do is 1910. So you can put, we were long. Alright, at 1,000 profit, take profit at 1,910 and you go out 1,900, take that down to 1,000, something like 190. Any lot here, $50 to avoid the counter lot is $5. Okay, so you may want to go out there, and I believe it is. You could try to go out around 1,000. Okay, we go out on a retraction higher or around at 1,910 to find it, and we consider to show the same level 1,910, 1,000 higher of 11 and 1,908. Okay, we already have negative momentum on the 1 hour and on the 15 minutes. On the 15 minutes. And our growth rate starts here. That's one, two, three, we could show these levels and get out of our long area. Okay. Once we show these levels, 1,910 say, then our stop would be 1,925, 1,930. To recap, our targets are in line with these projections here. 800. Okay, our first target will be 1,000. We were long, alright, that's 1,915 and 1,940. Our stop was 1,900. We'll take that down to 1,000 and even below, all the way down to 1,000 to avoid the current market turbulence. If, okay, and 1,100 gives way, and I believe it is giving way, about to give way. Okay, we go out, right? Okay, so we reverse higher of our longs at 1,910. And we'll consider to show the same level. This is what the market is showing them, 1,911 and 1,000 according 908. Okay, we already have negative momentum. What the question we got 1 hour and on the 15 minutes. On the 15 minutes, this is what we see that now. Alright, and that's what we now go. It starts here. That's 1, 2, 3, 4. We could show these levels and get out of our longs in this area. Okay, once we show these levels, 1,910 say, then our stop would be 1,925, 1,930. Our targets are in line with these projections here, 1,800. Okay, our first target will be 1,820. You will see, of course, intraday 1,840 and 50. Then it's 1,820. And even below, all the way down to 1,800. Okay, and 1,700. And yesterday, remember that we expected that the market. Right. Okay, so we reverse. It's against, of course, the bias. Bias fundamentally bullish, but alright, this is what the market is showing. And it was lower on the momentum. We'll get to that in a little while. Okay, so what the question we got in oil. Okay, so We expect to that now a head and shoulder position, and we're going to test the necklines in the oil for 37.20, 37.50. Okay, and this is the current trade management that we see right before us. Of course, we're correcting what is expected to be an Elliott uptrending wave. That's 1, 2, 3, 4, 5. Okay, that's the B, and that's the should be here now. It should be coming down. So if we do not bounce at the top of 1. Okay, so we would be interested. We have negative momentum. Alright, so we bearish that, and actually we expect the counter correction that we're seeing right before us here, okay, to either test. This is the bottom of 1, so it should test all the way up to 41. Yesterday, remember that we expected that the market would be in the diagonal, so probably that should be that to the 60 diagonal. If you are here, projections of it will go right on the middle close and lower on negative empty momentum. 5 and higher to test top of 1. So we expect to see now a head and shoulder dedication, and we're going to test the neckline at whereabouts for 37, 20, 37. Projected fibs, of course, are 45 and 43 management. So we've been interested to something. Of course, we're correcting 5 and 41. Our stop back above and Elliott uptrending wave. That's 1 Elliott structure. Okay, that's a B, and that's the should be here now. It should be coming down. So we do not bounce at the top of 1. Okay, so we would be interested. We have negative momentum. Strong. Instead of them and selling 46. We expect the counter correction that we're seeing right before us here. You could contemplate to either test. This is the area where this is the bottom of 1, so it should test all the way up to 41. You could take a short here, a small short or half side short. Okay. It is and also probable that it should eliminate entry short that 49. You are taking the projections of the position from this line below. I believe it could still spike. Okay, so that is 1, 2, 3, 4, 5, and go higher to the test of 190 and 41. Okay, okay. And that takes us to 41, 20, whereabouts like that. Okay. Alright, so the fibs of these. Alright, and then we're down to, we're running down. Projected fibs, of course, are 46, 37, 45, and 40, 30. So we'd be interested to sell 40, 40, 35, and 40, 30. Our stop is above $3. The complete Elliott strike against a $1 SEC and that's just white dotted line. Your stop would have to be 42, and here is how they pay at 30, just 70 slightly together. Instead of selling 40, 60, 40, 45, and 40, 30, you could contemplate, you can't be single, you will not contemplate to go long until you stop interested in selling. So you could take a short here, a small hour, or half side, or we get to levels of 35, a limit entry short at 49. It's like we're shorting this zone here, 1, 40, 50, 40, 75, 40. I believe it will still spike. Because all of this is the higher noise band on the right, so the briefly I guess the short at 49, all the fluctuations is the higher noise band on the weekly. Okay. And on the monthly, right? Alright, and then we're down to technically we're running down 45 this month. You could see CFC 37, the breakout low at $35, so we could target 35, we're targeting of course 7.5, 38, but this is stay above the level 1. Now we will not long it except that for $35, we're not contemplating to go long except at $35 against a risk of $2 improvement in the 50 momentum for some in sentiment or momentum. And here is how they pay 37.20 in the okay, so to recap on oil, we could consider the short count market at 46. We will not contemplate to go long until we see okay, and all the way up to positive momentum 49 hours. Below this point here at 44, we get to levels of 35. The compromise half the position at 46. It's like the red on this zone here. Right? Our stop is 475, 424, 423, 37. All of this is the higher noise band on the weekly, I guess. Okay, so move on to our next issue, which is sterling. Okay, we can go back now to sterling and on the monthly. Right. So we're shorting this zone, and technically we could still see 35 this month. You could still see the breakout low at $35. So we could target 35. We're targeting close to 37.5. This is the breakout low for the company. Right, so we're not long except at the $35 level. We're not contemplating to go long except at the $35 level. Or if we see the improvement in momentum, okay, in sentiment or in momentum, that this goes positive, then we would consider to buy. Okay, so to recap on oil, we could consider to short count market at 40.63, that's 40.59 here, okay, and all the way up to 49, below this point here at 41.06, okay, so that's 40.90. You can compromise half the position to 40.60 and the rest out of 40.90. Our stop is 42.50, the high here is 42, okay, and we are going to target exactly 30.
Advisory shows pinpoints directly which currencies go by.
Okay, so move on to our next issue, which is sterling. It's most comfortable right now. Sterling,
I will take the United States dollar,
that's here.
yen.
Alright, it's a very lucrative trade.
I will also consider the sterling against the United States dollar. What will about it? Right, if there are any questions, please move them on to the moderator. All the rest, wherever anybody without any
Issue, please name it or point us to it, and we can redo it and revise it and be there. Okay.
Another question is gold will go up, right?
At this point, we are not really sure. We cannot really know. We just checked on gold. I'd rather do sterling pound and go back and have a look at gold again. On the best scenario, fundamentally, we were expecting gold to go up. Well, it is not acting
So there's a question
as per our bias or our take on it at this point. The correction is of course deep.
Well, of course, all of our advisory shows pinpoints directly which currencies go by, which pairs go by, and which pairs
So maybe it will bounce at the top of one.
It's most comfortable.
Okay, and we will redo it at the end of the analysis. Okay, to see how the market stands then. Alright. Alright, we're bullish, but we are considering to go bearish. But we have to wait until the market plays this here. Okay. Alright, so we move on to sterling. This is our trade, this is our fundamental chart. We're all reminded that we have a cycle translation line here, all the rest cycle translation support here. Issue this, name it, or bearish, and we can redo it below the cycle translation support here. To bullish below the cycle on the side. At this point, we are not really sure. We cannot really go like even on very strong check on gold. I'd rather do sterling pound, and the price could not break below the bullish scenario and the bearish scenario support line. Fundamentally, we were expecting gold to go up, okay, and well, we believe that this head and shoulder formation converted as per our bias or our take on it, and is valid bullish correction is of course to take us into this ending diagonal rising higher. Okay, so if this is a wave 3 here, that was a 1, 2, that's a 3. We did the 4A, we're currently doing the 4. So maybe it will bounce at the top of good. Let's give it more time, surprise us all, and we will do it at the end of the analysis, right? Okay, we'll see how the market stands then. Potential for this, we're bullish, but we are considering to go bearish. But we have to wait until the market plays its hand, okay? Alright, please can wait this. This is our trade. So that's the chart. We're all reminded that we have a cycle translation. We did, of course, a breakout high, yesterday, all the way up to this is defined by the fact that momentum reversed, okay, and bearish. Below wave here is segregated on the bullish chart, I think, below the cycle or on the cycle. And So like even buying is wrong negative corrections of that would be okay. The price could not break below that cycle. So we broke out of that triangle. So that's the way we see. There's also so-called a mature of that. Okay, and this is from the buying that this head and shoulder formation. We expect a deep correction to test the neck will hold. Okay, and so we will pass out bullish pattern and that will take us into this ending diagonal. We will not even end. Okay, so this is like entering there. That was the 1, 2, that's the 3. We can't even get the 4A. We can't assume the 4B. Or then 4B could actually surprise us all and equate them high with potential to go all the way down to 1.25. Okay, the market is potential high and all the way up the best at the market as for 70. So our entries are close. Points can be filled at 130, 130, and 120. Okay, so let's take a night trade management. We will only alter these entries. We did, of course, a breakup high. We will want to look at okay, so we will pass out 130, not enter at 61. If only we will not even enter. We see positive to find, and then we see positive momentum, 30, 50. Okay, and 38.2. Alright, 38.2%. So this shows 1.33, okay, and 130.50. This has potential to go all the way down to 1.2885. Okay, the market is very volatile and we will take the best that the market can give us. So our entries are poised to be filled at 130.30, 130, and 128.29.85. We will only alter these entries when we get to see positive momentum. This is now higher hourly chart. We're doing 130.90, okay, and that's all. Let's wait with if we want to probably where the triple fill they are taking us 51. Okay, so okay, we will not fill it. We will want to look at the lower time frame. See where this is leading. We have negative momentum. So only fill higher. We see positive momentum. Until we see positive momentum. Okay. Alright. Good. Also seeing here. That kind of a structure. You could of course project the correction down in order to know if we will be still with an interruption. Until we see positive momentum, there's no need to fill higher levels. Okay, alright, so let's see where the triple projection. So this takes us down to 130.60, closing up to 130.50. Alright, and we could also see, we could do that, we're going to edit that for a long time. Maybe sounds 129, 130, 30, and 30. So we'll wait for the market to play its hand. We could see favorable levels. Alright, good. So the slide we're also seeing here is going up. Alright. And the market appears to be discounting fundamentals that we are not sure of, very strong, which is making it bullish. Okay. So we would consider to start entering that structure. 50, this is 3060. You could of course project the correction down 1.30 in order to know if we will be maintaining that's 130 here, our projected levels or not. We compile 3 minutes, alright. At these levels, our stop is 129. That is that point here. Right, so this takes us down to 130.60, closing up right below the breakout wave. Alright, we are quite sure this is reasonable. Let's see to do that. Momentum signals on the time. So very vibrant and very strong. Okay, very strong read. So we would buy very strongly, wait for the market at the very bottom because it is squeezing. See favorable levels to enter. We want very bottom at 130 and 1.2985. Just hold on and the analysis shows that once we do feel these going up, okay, we go all the way up 133. And the market appears to be discounted fundamentals that 61.8% of that. So we would put this is on our trending channel and that is 61.8% of that of 3060. And so we would expect to test 1.30. 20
I believe that's 130 here.
It is our level 3350 and compile 3 minutes. Alright, at this level, our stop is 129. I believe in all cases here, right,
you want to act
below the rate to take profits on an intraweek, right below the breakdown rate, because we are quite sure this is the breakdown. So the market should be moving faster, very vibrant, very strong. When it does very strong, we gain. So we would buy very strongly in it. By the very bottom, because it is squeezing the market. This shows that the market has already very bottom at about 30 and 1.9. Just hold on and be patient. Once we do feel we're buying now, we go all the way up at 1.9. Alright, and back to test the 61.8% of the 3350. This is an uptrending channel, and that is 61 about the same of that month and 50% below that. So we would expect to test 33 below the mark to 28, which is about 33, and even about to 34. The risk reward, of course, on this trade is very lucrative. It's 50 and 33. 1 to 33.50 for the trader, 33.50 for the trader. We are reminded, I believe, in whole reminder that at the current level of 130 to take profits on an intraweek basis, we are about 29.23. We have spoken about this neckline now, right? And on that kind of signal, that kind of bearish trend when it's left completed, we did reject the last time at the trend high. And this shows that the market has already broken about, it seems to have broken about now down channel, and this kind of signal of momentum, we're buying now the retraction that kind of momentum high here. The last time it did back on the market took us all the way monthly band 40 from 1.3 dollars from close to 53.50 for 1.2 and the 1,072, which are about the big round that we have a month and 55 below that. Its top is below the moon. So you may want to hold that even beyond 134. The risk reward, of course, of this trade is very lucrative. It's good money for 1 So our next issue is we are reminded, just a reminder, that at the current level of 130 and 1.3, okay, we are a reminder that this we have spoken about this neckline now, right? It's doing it, and on that triangle of direction, we think above that neckline to remain, okay, the bearish trend seems to have completed, is still inactive. We did reject the last time we did some kind of bear flag in that, that's the downtrending channel. It seems to have broken above now downtrending channel, and this time on the short term are bearish. Okay, let's see why. It's kind of momentum reading here. So the last time over now, enact on the market took us all the way to 140 from 1.3 and even 1.43. So 1.3, which is about 1,300 pips. This time around, I believe we're going to 145. Okay, so you may want to hold that even beyond 134. Okay, and make some good money. So this is the technical picture. Okay. So our next issue is the yen, the pound, yen, sterling dollar, yen, the sterling yen. The rejection here, so as a reminder, it seems to have lost all, is doing a triangular correction, higher degree impetus to move forward, and we are looking for a deeper correction. Currently with E that's still inactive, and we expect to be doing some kind of a bear flag in that, right? So we apparently are resisting at 38.2% of that outstanding channel, but on the short term, they are bearish channel. Let's see why. Check that. So the market moving lower now, slide. However, we have resistance there, and we expect it to be doing an ABC correction and some kind of a wedge similar to that. Okay, that is also okay here. We had that wedge to test the lower boundary of the channel. So we did break below the lower boundary of the channel, and so this is the technical picture. I'm about to test the wedge one more time before we go higher, like what's happening. This short reminds us that initially we were seeing the head, but the rejection here, it seems that we have the market will testing our strength or testing our will, alright, we are still seeing move forward, but we do get that wedge. We are looking that we have a right shoulder here, then we see that shoulder here, as the market will test that neckline and break line. So we would already bearish at commodity 2% of that previous channel. Okay, that is and got us nowhere. That would go okay. So slide. However, that's why we exited there, and we expect it to be an ABC correction on some kind of wedge and now bullish. Okay, that is what's here. We had that wedge. Of course, that's so our momentum, the lower bound of the channel. So we did still break below the lower bound of the channel, and appears that again can sell this into that wedge, although we go higher. Like what's and then we would reactivate at 135. This chart reminds us that initially we're seeing the head break out the head and show with one completed, and then we're going to have that the market would be testing our strength, testing our will, in still higher moving up. But we do get that wedge, we all think that we have the right shoulder here that could start selling the market at 137. Test that neckline and break lower. Okay, but we've come already through that. We were bearish that commodity, and we did a correction previously, so that now the market has got us nowhere. And we should be seeing the market is counted to see down. That's why we actually reversed down to 125. We could see that check and are now bullish. Okay, out. Of course, this is for our momentum, and there is a spike in momentum. We will still retain our bullish bias. Okay, short term we can sell into that wedge all the way down to 135, and then we will reaccumulate at 135. Alright, for wave 3 to break out, that will be a wave 1 completed, and then so this market actually did 137.6, and we're going to see this yellow and here enact higher all the way up to 1. So that will be our primary. So for day traders now, we could start selling the market at 137. Okay, this is the wave count that we're seeing. We have this is an hourly chart, 1, 2, 3, 4, and that's a 5. And we did a correction. Now the count. There's still of course positive momentum on the hourly chart. We expect this market is counted to see down bearish pattern that's down 134, and we're going down. See that. But because of this kind of momentum, I believe this is an ABC, and that's out. And then we're going up again in an ABC higher. Okay, and then we don't have clear sequence to show the Elliott sequence to show. So we'd rather sell 137.60. We'll raise our entries here. So this market actually is 137.62. Okay, we change that and bias to sell 137.60. Change that bias to sell 137.60, and then okay, we still have the same stop at 138.50. That's better. Still, of course, positive momentum on hourly chart. Selling this at the 60. Bearish Elliott pattern. That's what that is actually 1.4, and we're going down. But because of this kind of momentum, I believe this is an ABC, and then we're going to 1, then we're going up again and again. Okay, at this kind of ABC higher. Okay, and then we're going down to 1.5. On the 15-minute chart of $300 for swing, we don't have block, and here at the target of 135, you're between about 600 sequence to show this yield with Elliott 150 risk. So we'd rather sell one, so we expect to bounce at the top of the ones here and do a second 137 and that 150. Before we go higher, we take out this neckline and move all the way to 140 and 139.60. And then okay, we would still have the same stop time and 135.50. That's that level that was here. Break out over the time. We'll be selling 137. We will buy that again. Okay, that's 137. Keeping our stop at 137.60. At 133.7 below 137 arrow, and we're going to 135. Okay, that is at this kind at 137.50 and stop at 136, and that it equates to minus 5% risk. Okay, or $300 or 3 stop getting block, and at the value of 135, you're between about $600 yield at the 150 risk. At this point of 135, we would expect to bounce at that point here and do a second inverted head. Before we go higher, consider taking out this neckline and we'll go all the way to 147.39. This is that trade is short 65 1. And it will average along with 135.1 at this point here. You're stopping 133.1 right below the head, and you're going by 135 and 135. Okay, that's the break up of the compound sample, 35 day wave, and we will buy that again. Great, above keeping our stop. This is at 194.70 below 133.70. 139 is above the above stop loss, the fluctuation one low for the current market. Okay, and which gives weights on the chart confirmation that it's below the head. Okay, so this is it has broken up. Okay, about 150 points, I guess. So 200 points. Yes, 200 points. Okay, so at that point, we would consider to long 135 all the way down to 134.7. This is 134.65, the top of 1. And you would average along with 135.1 for 3 minutes. The stop is 133.1. Okay, so that, and you're going for 132. Okay, that is the end point here. To wrap on that, we are currently bearish of this wave, and of course we want. Okay, we will about to sell this is 139, sell 157.9, above the fluctuation, above, okay, we still see the fluctuation below that, testing current highs again, which gives us one confirmation that if I was on 6, trend, we would still see that as broken up correction, see that in a correction. And then we go for 135 target. This is right about the entry is about this yellow arrow here. We go for 135 target before the top, which will then give us a confirmation that the bullish trend will give us a 120 essentially. This will give that to change to 137.5. Right, once we have concluded that entry, probably towards the end of maybe tomorrow or early next week, we would consider to buy 135.5. Okay, so that double the heads conclude that neckline, and we expect this market is turning again. I to wrap on that, we are currently bearish. This whole way, we to buy 135.5, or we would want to sell 134.5 at 137.6, 1 here. We're going all the way to that, testing these sides again. Average then 1.5 or 5, 6. Our stop is 1.2. We still see that right below correction. We see that second correction. And then we go for 135 target. This is right about the entry is about this. Alright, we move on. Arrow here. We go for 135. Alright, we move on to commodities. And it's gold again. 138.5. Right about that point. This question, so that question. Oh, right. This will give us a 1.2. Right. Right, once we have concluded that entry, probably towards the end of maybe tomorrow or early next week, we would consider to buy 130 sky by 8.5. We would have now doubled inverted heads below that neckline, and we expect this market is bullish and it will go high. This third level dollars, any question, and we'll go afterwards to the moderator and consolidate to buy 135.5 all the way down to 134. So okay, so my goal, let's take a look at motivation. We're going all the way to 139. We've averaged then 135.5. Our stop is 133. Okay, so we broke below now 1,900 head here. At this point, it's become invalidated. The market has tricked us. Alright, we move on to commodities, and it's gold again. We would want to go out of our long question. Remember that this was our trade management here. We expected that was an area structure to hold, and we were buying, we bought 1,900 stop in and 1,900 our stock with 1,100. That is your Skype link with gold 1,900. That's not taken out. I had earlier issue. Send it over on Skype. We go out on it. If you have any questions, please now go on to the moderator and we will set now the bottom. I will go out at 1,910. Okay, so with gold at the $5 loss section or whereabouts, we didn't see larger retraction. to take you out at 1,950. Okay, so we will now reverse. Okay, so we broke below now 1,900. We broke below the top. This is one growth base to follow, right? Okay, and we definitely confirm here. So that is one of the analysis indicators. Fine, it has picked us. Okay, we have to label it. So we would want to go out of our longs. Remember that this was our trade management here. We expected that was an Elliott structure to hold. And we were buying, or we bought 1,915 and 1,915. Our stop with 1,900. That's not taken out. I had moved it earlier to 1,890. We go out on a diffraction. I would consider now we are bouncing out of that. So this is now bottom point. I would go out at 1,910. Okay, at the $5 loss or whereabouts. We didn't see larger diffraction to take you out at 1,950. Okay, so we will now reverse position, short. This is the growth base to follow, right at this point here. Okay, so that's the 1, 2, that's the 3, 4, 5. At the most, we have to label it, so that we have to see it properly. Labels which we will be implementing in our trading now, in our short trading. Okay, so you could draw a line here and you will see some kind of a head. Let's see if we do that. Right at the top of one here, this is where the cycle ends. Remember, we're looking at the 50-minute chart. Okay, so we have a head here, and this is the first bearish cycle. It ended at 1 here. We confirmed that at that point. It's now here. Actually, it's here, but we now confirm that this is our growth wave. So just to do that. Okay, see these are the labels, these are the structure labels which we will be implementing in our trading now, in our short trading. Okay, so you could draw a line here and you will see some kind of a head. That cycle has always completed and should complete at the neckline. That's the first wave 1, 2, okay, where you could not really be right at the top. Now we have a breakout cycle M, this is evident. This is probably the first leg of 3, so we put it at 3, 1. And this is the 5, remember we're looking at the breakout. And this is what we can sell out. Okay, we can sell 1,900. We have a head here, and this is the first bearish cycle. It ended at 1 here. Okay, confirm that. Our stop is 1,925. Must be about this point here. Okay, 1,000. We have confirmed that this is high. Targets at least for 1,840 doing that. Okay. If you're long, if we are still long, we go out at a loss at 1,910. The most probable value that you will see is 1,902. So you have to cut your losses there and pick maybe difference between 1,915 or 1,950 and 1,900. So which is about 7. That cycle has always closed that and should complete at the neckline. That's the first way you want to consider to go short. And what you're actually seeing or doing is you sure that you see now there's a breakout in 3. This is evident. And shoulder structure. This is probably the first leg of 3. So we put it at 3, 1. And this is the 5 swing more concerned, and this is local structure here, okay, we can sell 1,910, 1,907, 1,000. This is the same structure that, okay, our stock is 1,009 on our very semi-5, okay, must be about just a matter of this head has made another higher head, and now we're doing a smaller head and the shoulder, targets at least selling to that 800, but it is the same principle. There's nothing different. It is the same theory, and if you're long, we're selling still long, we go out and the loss on the hourly 1,900, and on the most probable value that you will see is 1,902. Okay, and I believe we did check the hour momentum also. I think maybe 1 hour difference between 1,915 or 1,915 and 1,908, which is about 5-7 hours, like you see here. Okay, and close that one, right? Then you would consider to go short. So that is a valid entry. Is you see now our head and shoulder structure, okay, according to more concerned with this local structure here, head according to our shoulders. This is also our head premises. This is the same structure that we are seeing. So there is a one concern on our very scenario, and that is okay. It's just a matter of this head. So you will another higher head, 1,910, head, shoulder, and we're selling into that shoulder. But it is the same is 1,000, nothing different. It is the same theory and the same price. We're selling on negative momentum on the hourly point and on the 50 wrong. This is the 50 minutes. We have, and we go of course to these targets, like I've been saying. Okay, and I believe we did show the hourly momentum. We were going, of course, on that study because we did not believe that we were going to get a bearish momentum spiking downward for 1,000 here, 880, but now we got one at 1,500. So that is a valid entry 10 and 4 according to our 800. So we can afford to change the study for here, raise the neckline higher, okay, and enter on negative momentum on the hourly and on the 15 minutes to the same targets, and to target again. Okay, 1,800 ultimately, of course, long term, that is 1,765 hour, and that is okay. And of course, for that kind of position at 1,900, so you will consider to sell 1,900. We will take profits earlier, much earlier, once you bring the neckline. Your stop is 1,925. The most feasible target is the 1,800 above this point. Okay, I believe I'm wrong. That here, 1,840. And we go, of course, to these targets. 1,840 is a very important zone because it is a breakout low for the we were going, of course, on that start at 1,800 because we did not believe that. And then we recurred the position. If that was 1,840 and for 1,880. There is the neckline here, we expect the bound. Both 1,460, 1,897, whereabouts. And so we can afford to change the study here, raise the neckline higher, 1,840, and that will be 1,000, and enter on negative momentum on the hour and our 15 minutes to the same target, 1,000, to target again 1,000. 1,800 ultimately, okay, long term, and 1,765. Will go out, right? Of course, for that kind of position at 1,900, 10 and 1,907. And it's very probable that we are going to correct much earlier once we bring the neckline at 1,000. This is we are still the most feasible target, fundamentally 1,000. Then we will correct. Okay, I believe the structure that here, 1,800, we will correct at least until 1,800, 1,640 is a very important zone. That's why breakout low to take profits, you know, so don't take advantage of it at 1,800. For that position at 1,000. And then we recur the position at 10 and 7. That was 1,840, and there's a 60 or 40. There is the neckline here. We expect a bounce, and it can show 1,860, 1,850, right? Whereabouts. And kind of wave here, I know it looks like now a double top, but still 1,840, and that will be 1,820 and 1,800 against you, and 1,820 here and 1,000. And so I wave today, okay? And after so to answer your question, gold will go up, right? More gold will go up. Remember, now gold is positive, okay? Strongly, and it's very probable that we are going to correct. I would think we are now selling. If this is the, we are still bullish on the sell fundamentally, then we will correct. 1,907, 1,904 or 5. Okay, the stop is 1,965. If you're long at 1,000, that's why it's important to take profits. Get out. Don't keep money on and 7 for that position at 1,105 and 7. It's okay. When you show these levels, your targets, your first target is 1,960. That's it, here 1,964. Or 1,900 wave here. I know it looks like now a double top. Personally, I would still turn against you. Alright, and then you will lose your profits. And then you working against you and redo the position. It still could be a bullish. Alright, wave today short at 1,860, 1,800 high. For 1,000. Remember, momentum on the weekly is positive, strongly, and on the daily is positive. Even this is 1,000. Okay, so to wrap up, we are now selling. Alright, so then we want to sell these values from 1,910, 1,907, 1,904 or 5. Your stop is 1,925. If you're long at 1,915 and 15, you get out at this level, 1,907, for a loss of $7 or so. Okay, when you show these levels, your targets, your first target is 1,960. So that is holding well, 1,964 or 1,940. You would expect to see 1,900. Personally, I go to trade management. Of course, we remember that, okay, yesterday we were going to long these levels here, redo the position. You would have the bounce out of that second translation, and you could re-short at 1,000. Abraham will see 1,000 a while back for 1,000. The current correction, so that chart was dropped when the price made on the index 366. Price here made 360. Alright, so that getting that correction that we're waiting for. We expect it to go down to 356 and 355. We move on to our next issue, which is metal. Okay, and whereabouts all the way down to 353. Okay, we'll buy half size because we could expect this to fall further and test that neckline here. Okay, because that neckline here would coincide with that is holding well here. Alright, just like this is the 1, 2, 3, 4, 5. That's a complete Elliott wave. We would expect to bounce at Elliott management, of course, but we remember that yesterday we were going to long these levels here. Okay, we have even 11 short level cycle translation 348, and I would long that we add double position. So the current correction, so that chart is dropped at narrow averages, and we're going all the way up to 370. Inside that price here, if we don't see on these levels, then we just do that. We are getting that correction that all the way down, waiting on the 53. We expect it to go down to 356 and 355 or 353. That will find this is where we buy 300 and our target is 374 and 374. They will end whereabouts or correction. Expected correction down. Here we buy half size, we long again for 300 and expect this to fall further and test that neckline, go as high as 400. Okay, because that neckline here will coincide with the bottom of 1 here. This one is broken without testing the bottom line. That's a complete low Elliott wave. We would expect to bounce at the Elliott structure, but maybe the Elliott structure is going to be repaired or get okay. There appears to be a demand. Okay, so if we lose these levels all the way down to 348, then this is driving the demand supply cycle higher. If this level is seen, we're going to say 420, and even see the higher averages. And we're going all the way up to 380 inside that area. So we could still see higher level, and just with the position at $3.86, all the way down to 353. So it looks like I was doing this several times to 340. That will fight below 4 here. And our target is 374. And 374, there would be on correction channel, expected correction down here on the low boundary of this long again for 300 and either by buying. Ultimately, we expect nickel to go as high as 400 momentum. We would bottom one. This one has been broken. We're now testing at the bottom of this. Okay, so you will know that you go positive and you buy it one white. Okay, there appears to be a demand because the uptrend is strong.
Requirement. Okay, so
Alright, we go for the
commodity
next issue, and this is driving the demand supply cycle higher. We're gonna see 420. You could even see a higher high. We've been having higher highs all along. Silver closed pretty much the same, so you could still see a higher high above 420 if the dollar is going to do that. Alright, on stimulus. So it looks like we will be doing this several times. But naturally we would not sell that. Of course, the correction is very mild. We need this entry on this channel. Right? We would not sell into it. Okay, on the low bound of this channel. We will expect, like we were saying yesterday, by buying fibs. Like we were saying yesterday, if you were long, buying negative momentum from 2280, 2350, you would want to think profits that way negative. 650, so that seems like also this, then you buy 650. So you could consider to take profits now. Okay, there's going to be a correction in gold and then there's going to be a correction in silver. Alright, let's go to the next issue, which you should consider you should take profits now, even if you are long at. Okay, what we're seeing now is at last we're going to see the C correction that we have been waiting for. Silver price pretty much the same story as this gold, and that correction equates with the final bottom that you should see on that triangular consolidation. Remember there was this line, but naturally they would not sell that because the correction is very mild. There was a time that was there. Alright, they would not sell into it. It seems that it's now back in action. We would expect, like we were saying yesterday, if you were long, take it down again, draw more at least. 2280, 2350, I would want to take profits at that point here. 650 doesn't seem like we're going to see 650 109. So you could remember that this triangle could always turn into a correction and gold, and then there's going to be correction in silver. Unless you are double bottom pattern, and the levels still should take profits now, even if you are long at 2280. Okay, if you liquidate long, what we're seeing now is at last we're going to see the one correction that we have in all cases. This is the fluctuation low for the current week, and the market and that correction, there will be no, this will be the fluctuation low, which will be the final bottom that is even if there is no triangular outrage in a bear trend. Remember, there's a bounce at that level and go high. Keep waiting till you would be one. And there was a time we thought that it had already corrected and finished, and we were going down about the breakout. Well, it seems that it's now back in action to the reference level. That's the D. Okay, and you're back again down by 2021 or 25. Okay, there's the capacity to test 26 that we never did that point here at 22. So we essentially, of course, buying support. Remember that this triangle should all turn into an inverted. It's not guaranteed that there will be that there is a very inverted double bottom pattern, and the levels turn against you are all here. Okay, so to recap, now we're seeing if you liquidate longs now, you could begin to relong at 2261. Close our longs. In all cases, this is consider now to buy low for the current week, and there's a market will be testing that even if there is no 50. This will be the fluctuation low for the current week. The market will be testing that even if there will be no more oriented outrage or it will test bounce at that level and go higher. So we will invert it on a long issue in 2260, and that is the zone that we will try to take and zoom on. 23rd about the breakout 2221 all the way down by a good position at these levels. A stop of closing and go back again. We will try to below 21 or 25 that level here. Takes you down to 21 or 26 that we never did see. Okay. So we essentially of course 25 or 45. We're not selling resistances because it's not guaranteed that there will be that there is a bear trend. There is no bear trend. There's a bull trend. So if you sell a resistance here, the market could turn against you any. Move on to the next issue. Yes, copper. Now we're seeing C as well. So we're seeing management right away. We would close our longs. Okay, and consider now to buy the test of that point here at 2250. Okay. For a more oriented triangle or a double inverted head formation.